Hey everyone. So I've got a little lesson on Bollinger Bands to share with you. While there's no trading at the weekend, while the markets are closed, why not jump into the education mode and I'll show you how to use Bollinger Bands. Before I do that, remember to smash the thumbs up button. It's imperative. It just helps with the algorithm. And subscribe to the channel if you haven't already. You get notified whenever I'm loading videos like this to help you learn about day trading, or whenever I go live. Notification bell there if you want to be notified every time I go live, which typically will be 90 minutes before the market opens each weekday morning or afternoon, depending on where you're sat. And occasionally the last hour of the market as well for power hour. So enjoy this tutorial. If you've got any questions, drop them in the comments and I will answer as many questions as I can. Thanks a lot. See you soon. Okay, welcome back to Day Trading with Tony. And in this video, I'm going to discuss how to use Bollinger Bands to buy low and sell high. So the Bollinger Band is an indicator that's based upon two standard deviations. Now, if you remember from your maths classes, two standard deviations on the bell curve look something like this. 2.5% above and 2.5% below of trading or numbers in a set or averages or whatever will be out of the two standard deviations. So the idea is 95% of the time you're going to be trading in this area. And that's what the Bollinger Band tries to predict. How does it do it? Well, as I put the indicator on, you'll see that it's an overlay. You'll see that there's a line in the middle and the line is the 20 SMA. So 20 moving average, standard moving average or simple moving average. Over the last, in this case, 20 hours, the average closing price, that's why it just closed there and then two standard deviations. All of this can be adjusted, but the standard layout, when you look at, you've got to pay attention to is the moving average. So this 20 SMA shows that we're in an uptrend. What does that mean? It means that you only want to buy in this scenario. And the idea is that occasionally markets get a little out of kilter. And in this case, we closed outside of the two standard deviations. And that's too expensive. So we came back down to the SMA and bounced from there. You won't be too concerned about the markets being overbought until you closed outside of the two standard deviations. So your entry is 95, your exit's about 97.5. It's a nice little trade. You're going to go with the trend. The thing that I would say about Bollinger Bands, though, is that absolutely vital. You need to pay attention to the slope of the SMA, the slope of the line. Now it's slightly positive here, but it's not positive enough to make it interesting. And this is a sideways, choppy, nothing market. And that's exactly how it should be treated. You'll notice that the Bollinger Bands get very skinny, and that shows a lack of volatility. And if you think about it, it makes sense. The 20 SMA and the two standard deviations in both directions isn't going to be very spread out when the price hasn't been moving very much. After this earnings call, you see that we shot straight up in the air and the Bollinger Bands exploded. In this case, we continue to see an uptrend for quite some time. There's the two standard deviations to the downside. And even if you didn't take that, and fair enough, you probably wouldn't have, but you have a daily closeout here and an entry off that 20 SMA. You closed out here, so at that point, you're a little overbought. So what do? Well, right. Most traders will take their profit right there and leave it at that. You're still in an uptrend, but you pull back all the way from here and you form a hammer. You break back into this area. The slope is still positive, has been for a while. You can get in and get out there, and you can just see that just boom, 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 all the way up. Okay. When you look at this chart, there are some pullbacks occasionally. But that's for people who are comfortable going counter trend, because even if the Bollinger Bands turn down here, you have to look at the longer term chart and decide, am I in an uptrend or am I in a downtrend? Well, you're in an uptrend. That would have been somewhere around here. So you'd have been in an uptrend for a minute, even though you have some pullbacks. Occasionally like this, you're still in uptrend. So definitely you want to keep the longer term trend in mind. Some people will get a little bit cute with these things and they'll simply buy and sell on both sides when we reach those levels. And that's fine, especially on closing outside of it, but it doesn't always work. You know, like everything else, there's no magic bullet, particularly in trading. You can say that you sell here and then you buy again when you close outside of it, and you sell here, you buy again when you close outside of it, which we're still waiting for that on this chart. You got overbought again, so you could say I'd sell it again, but again you didn't have the close outside, so that's the problem with playing both sides. And quite frankly, it's much easier to play the oversold condition in a longer term uptrend than it is anything else. So that with the longer term trends tends to work out quite nicely. Thank you very much. As you would expect, it's all about following the longer term trend. Never forget that this is the one thing I want you to take away from this lesson, more than anything else. Yes, at this point you're overbought, but you look how overbought you actually get. You could go back 2 standard deviations and you get out. You could have been, this could be the entire trade instead of just getting out right away. And the way you feel comfortable with this trend is because you're going with the longer term trend, because these areas here that I had mentioned previously, well, technically overbought, it's still in an uptrend and it can stay overbought for quite some time. Oversold in an uptrend like this is a buying opportunity. And here, totally different scenario. So keep in mind that again, that you're going to be going with the longer term trend to make sure the SMA is moving with the long term trend, weekly chart or at least daily charts, and it tends to keep you out of trouble. Okay, that's Bollinger Bands.